Michael Burry recently made a $1.1 billion bet that AI is going to crash. The same guy who predicted the 2008 housing crisis was shorting Nvidia and Palantir with 80% of his entire portfolio. Then, before I was able to publish this video, Michael Burry shut down his fund, said markets have stopped reflecting reality, and added, "On to much better things, November 25th. Wait, what? Here's more details behind that story and other things AI valuations. You be the judge whether AI is a bubble or not. Let's start with the most damning piece of evidence. In August of 2025, a bombshell report from MIT dropped, and its findings were staggering. 95% of all AI projects are a complete failure. Let me say that again. After an estimated $30 to $40 billion in investment, 95% of companies are getting zero return. Why? Because the companies seeing any positive results are the ones using AI for one specific routine task. For everyone else trying to do a broad company-wide implementation, they're struggling massively. The report found that these generative AI tools are great as personal productivity boosters, like a fancy spell check, but they aren't moving the needle on the actual bottom line. They don't learn from feedback, they can't handle complex longer tasks, and even in their best use case, coding, the output is often filled with errors that need a human to clean up. So, we've spent mountains of cash on a technology that, for the vast majority, isn't delivering. And if you think that's bad, wait until you hear what happened next. Now, you might think the biggest AI cheerleaders would dismiss this, right? Wrong. In the same month of August, the CEO of OpenAI himself, Sam Altman, went on record admitting that yes, AI might be in a bubble. The current boom is focusing on rising stock prices, not the actual value being created. And the scale of spending is almost hard to comprehend. In 2024 alone, just 4 companies, Amazon, Meta, Google, and Microsoft, spent more than 1% of the entire US GDP on AI infrastructure. We've blasted past $1 trillion in hardware spending. Data centers already use 1.5% of the world's electricity, and that's projected to double by 2030. But here's the key takeaway from Altman. He said bubbles form around a kernel of truth. The internet during the dot-com bubble was real and transformative, but most of the companies built on it failed. He believes the same will happen with AI. The underlying tech will keep developing, but the hype will die, and many of the flashy startups will disappear. When the guy at the center of it all is telling you to calm down, you should probably listen. But here's where it gets really interesting. Which brings us to early October, when Bloomberg published a diagram that went viral shortly thereafter. It illustrated something called circular financing in AI, and it's a major red flag. Here's how it works. It's like a circle of big companies financially propping each other up. For example, Nvidia agrees to invest up to $100 billion in OpenAI to build data centers, and in return, OpenAI promises to buy millions of Nvidia's chips. So the money just goes in a circle. It's not real external revenue. It's like you giving your friend money to buy lemonade from your stand. It makes both of you look busy and successful, but no new money is actually coming in. OpenAI has similar deals with AMD and others. This entire ecosystem is being held up by these mutual back-scratching deals, and it's incredibly fragile. If one major player like OpenAI runs into trouble, it could trigger a domino effect, taking down Nvidia, Oracle, and others with it. This is exactly the kind of vendor finance demand bubble we saw in the dot-com era. It's a house of cards. Now, this next one shocked even me. It's not just economists and CEOs. On October 18th, one of the most respected AI pioneers, Karpathy, a former lead at OpenAI and Tesla, weighed in with a brutal assessment. His word for current AI? Slop. He said today's AI agents lack memory, robustness, and reliability. The large language models have fundamental cognitive deficits, and that truly useful autonomous AI agents are still a decade away. His message was simple: don't expect AI miracles going forward. When one of the leading technical minds, a guy who helped build this stuff, calls it slop, it's time to pay attention. And finally, the ultimate vote of no confidence. In September-October, Michael Burry, the legendary investor famously portrayed by Christian Bale in The Big Short for predicting the 2008 housing crash, placed his bet. He has bet over $1.1 billion that 2 AI giants are going to collapse. His fund took out put options, basically a bet that the stock will fall, against Nvidia and Palantir. This wasn't just a small side bet, this made up a staggering 80% of his entire portfolio. He wasn't expecting a minor correction, he was betting on a catastrophic crash. If there's one person in the world whose opinion on a bubble you should take seriously, it's the guy who has been right before when everyone else was wrong. Now, right before I wanted to publish this video, Michael Burry shocked the financial world. In a letter to investors, he announced he was shutting down Cyan Asset Management, returning all outside capital, and walking away from managing other people's money. Well, most likely that means his earlier put bets against Nvidia and Palantir are off now. Then he went public with the reason. His view of market value has not been in line with market realities for some time. And in a series of posts, he compared the AI boom directly to the dot-com bubble and said something striking. Sometimes, the only winning move is not to play. He didn't walk back his warnings. He doubled down on them. He simply chose to exit a market he believes is disconnected from fundamentals and free himself from client pressure in the process. The same pattern happened in 2008, right before he was proven right about the mortgage crisis in US. Burry may be handing his clients their money back, but his social media posts suggest he's not going anywhere and may feel more liberated to say and do what he wants. On my humble opinion, the evidence has only grown stronger. The AI bubble isn't just inflated, it's inevitably approaching a breaking point. So, let's recap. We have a 95% failure rate in real-world implementation. The CEO of the leading company admitting it's a bubble. A circular financing scheme creating a fragile house of cards. A top AI pioneer calling the current tech slop. And Michael Burry betting $1 billion on its collapse and then shutting down his hedge fund a couple of months later. The kernel of truth is that AI is a powerful tool. It's not going away. But the manic gold rush, the insane valuations, and the blind hype, the evidence is mounting that it's unsustainable. The bubble might not eliminate AI, but it will separate the truly useful technology from the mountain of overpriced hype. And when it explodes, it's going to be messy, but what do you think? Is this just a necessary growing pain for a transformative technology, or are we headed for a major crash? Let me know your thoughts in the comments below. Full transparency, I'm a digital avatar of this channel's host, who is currently busy working on more videos like this for you. And isn't it ironic? AI Clone is talking about the AI bubble.